Also, I'm going to start telling certain experiences of mine, and also I'm going to share a lot of things on how IPOs are not faring very well, and I'm going to come up with a video very soon on those. Hi guys, what's up? I hope everybody is doing good and you did enjoy the previous video on Fibonacci retracements. Now is another very similar video on pivot points, which are very important determinants of what could be the support and resistance levels. If you want to understand what support and resistance levels are, I've already discussed that in the previous video, the link for which is in the description. You can take a look at that. And if you are a first timer to this video and to this channel, you might as well want to check out the entire stock market series. A series of 5 videos with a lot of informative content has already been recorded and put for. So if you want to start your journey in stock markets, it's better that you understand the fundamentals rather than just go around thinking about making money. I don't say you shouldn't, but then understanding the fundamentals, knowing the concepts in depth, and understanding how these psychologies work is also very important. So what exactly are these pivot points? How do they help us in determining what our next move should be? What could be the direction of a particular stock or even the broader markets as such? Is it reaching out to a resistance level, and is it heading towards breaking that resistance, taking a breakout and going up? Or is it continuously falling? Then if so, how long will it fall for, and will it pick up support at a particular level and retrace from there? So how does these pivot points help us understand what exactly are these, and mathematically, or rather say technically, how are they calculated? Though we're not really bothered about the formula in today's time, I just give you an insight on that, on how this works, and then we'd also see on the chart of a particular stock or an index, how do you plot pivot points and how can you take calls on it. So without any delay, let's get into the video. And once again, if you are a first timer, do check out the entire series, the link of which is in the description. So what basically is a pivot point? Where do we start off from? So it's basically a tool in the technical analysis. It's as simple as that. Like how we use fib retracements, pivot tools are also very important and interesting in determining what are the support and resistance levels. Now, what do traders do here is that they take a different time frame. Now, this level is not necessarily something that is relevant only to a trader. Even for investors who are going in the short term or the near short term or in the long term, they might also, for determining a right entry and exit point, because sometimes it's very important that you take an entry at the right point and also mark an exit at a very important point. So why are entry points and exit points important? I've mentioned several times in my past videos. Now, a seasoned activity that takes place from the set of traders in a stock will determine in what pattern it is moving. See, when the ideal trend is towards being bullish, the stock can't be ever bullish. At some point of time, it reaches a level where people will start selling, and that level generally is called as a resistance level, where to break that certain level and go up, it needs more strong buying to happen at that point. Same way, a stock continuously or the market continuously can't fall down, because even when it's going on falling like that, somebody at some point of time would like to pick in an entry at that point of time. And when large number of buyers encash that situation, seeing that right now it's at a very attractive price, again the buying starts there, and again the prices pick up at that level. From where things go up again, that is called the support level. So just a quick refresh for us on what are the support and resistance levels. So what does pivot point help us understand? Now this is basically a simple technical analytical tool, and it goes by a simple book definition. You can see there, it's the average of one prior period's high, low and close. Is the average of what? High, low and close of one prior period. Now this is a very subjective term, because we are not talking about what a prior period is, and because it's different for different people, and I'm going to take you through that in a greater detail here. So it is the average of one prior period's high, low and close. I will eventually throw you up with a formula there, but more than all that, we will see that in a chart as to how it works out, because you don't have to sit and calculate all this today. So as I just told you, a stock is generally considered to be bullish if it is trading above the pivot point, because it's going above the pivots, breaking resistances, and then still going up and up. That is, it's a very bullish outlook. Maybe there are temporary downs, but it's the trend is headed towards being bullish. And if a stock is trading below the pivot point, now there is always an entry point you can take there also, because once it reaches a support, there is an expectation of it will retrace back to the pivot point. Now again, support levels also can, be termed as S1, S2, S3, and it goes on like that, as I discussed in the previous video in Fibonacci. So there are various levels there, right? At 61% retracement, at 50% retracement, some people use, at 26% retracement. At what point it is taking a retracement, that was based on the FIB calculation, but here it's going by the simple pivot calculation of an average of high, low, and the close. And it's kind of bearish if it's trading below the pivot point. I would just show you that and validate it with a much better example here. So let's talk about the subjective word that we are using here, one prior period. What have we been calling as this one prior period? And in order to understand what we call as one prior period, let's talk about the trading timelines. Now, there are some people who want to buy and sell on the same day, which is called the intraday trading. I have put out my discussion on intraday trading in the part 2 of the series, if I'm not wrong. So you can see what intraday trades are, when do they enter the trade, when do they exit, all of that. But basically the entry and exit are on the same trading day. That's intraday trading. Swing trading and long swing, as I take you through, I can just show you as to what those are. Intraday are where the positions are squared off, that is buy and sell happens on the same day. When market opens to market closes, the positions are squared off, and here people don't go by a longer time frame. They take shorter time frames of 15 minutes, 30 minutes, 1 hour, and a maximum of 2 hour. That too, you'd find hardly 3 2 hour intervals in a trading day, because it's just about somewhere around 6.5 hours, and you need the right entry and exit. So generally the most widely used indicator would be a 15-minute indicator. Some people go up by 30 minutes, because that's the duration they would like to hold on. Now there are people who use less than 15 minutes, people who end up doing some very technical trades called as scalping and all that. They might even use a 1 minute, 2 minute, or a 5 minute time frame as well, because they get into quick trades and get out. So we are not talking about such intense things right now. Right now we're just talking about an intraday trade. Probably a swing trade is where you are holding for more than a day, maybe it can last up till a month. Then you can go use the daily time frame charts, and probably a 2 hourly time frame. That's because it's going to cover in a month probably a 15-16 days coverage. Normally that's what a probable timeline is, what you can see to understand how pivots work, because 15 trading days are roughly around 3.5 weeks, right? So without any holidays, if it's coming up 3.5 days, that's close to a month. So 15 to 20 candle lines, if you're seeing on a daily chart, probably you can widen it up by a 2 hourly chart to see the trend and moving patterns there. And then a long swing, which is generally couple of months, or maybe even if you want to hold it even for 3 months, is what I would want to call it as. Definitely it's going to last for more than a month, and here we would definitely take 1 week. You can still use the daily chart. I personally, even for a slightly longer swing, use a daily chart also. And if I'm a little more keen in knowing the longer trend, I might stretch it up to a weekly chart. I personally don't use the monthly chart. It's too wide for me to know a very monthly trend, unless I'm going very long term, where I am clear in my mind that I have a 12-month time horizon or something like that. Unless I do that, which is a very rare thing. So generally, I get in, get out, like sometimes in a month. Sometimes I hold it for 3 months. Sometimes it forces me to hold in more than that. The market's very unpredictable, right? So you don't really know. But for bad trades that I take sometimes, when I want to average, I definitely use pivot points as my key source to go along with. Now, how do they really work? If you can just go by understanding. So yeah, that's the final conclusion. You got to take in order to mark a pivot point for a particular day, you got to calculate the average of the previous days. So because you're taking day, then if you're going by respective timelines, you'd use the same timeline from the previous day. One prior period would be a previous day, and then you take the average of high, low and close. So for an entire day, the average would be a point where the price is most likely to react. So that is the serious point from where anything can happen. Either it can go up or come down, and where real action happens. So that's what is the pivot point that we would call for. And rather than using some very complicated tools which are still there, I would definitely help you with those tools as well in the coming videos. But if you are keeping it very simple, you can go by using pivot points. In fact, even if sometimes you don't want to go with the fib retracements, or you don't trust that so much, you can stick to the normal pivot points. Okay, for swing trades, like I said, where the prior period be previous month, this time it be the month's high, month's low and month's close. And for long swings, it could be the previous year's high, low and close, and that's a little wider time frame. So these are, again, like I said, book definition. So we would be more interested in learning how this works, and I would want to show you that as well. So before we go on to understand how pivot points can be marked using a trading view chart, I'll talk about what two pivot points people generally use. Now, as in we've seen R1, R2, R3, these are resistance points. S1, S2, S3, these represent the support points, and in between these is the most important pivot point. And from where you can right now see how these set of things, they are called traditional pivot points. And for understanding what Fibonacci pivot points are, or Fibonacci retracement points are, you can watch my previous video, the link for which is again there in the description. So you might want to know how Fibonacci retracement is drawn, what is it, what is basically done in terms of understanding where it can retrace from. So this particular session, we are keeping it very simple and easy by only talking about straight pivot points. The mathematical formulas are clean and simple, as you can see there. And once again, I'm just telling you that in today's time, you don't really need to have an idea of what these formulas are. If you are just using like both the formula, yeah, this is a traditional approach formula where the central pivot point is the average of the high, low and close totally divided by 3 will give you a pivot point. The immediate resistance point would be twice the pivot level minus the low, and the second resistance point would be the pivot point plus the immediate high minus low, and vice versa. On the downside, you will have twice the pivot points minus the high will be the support level, so that it can pick up from there, and the pivot point minus the difference of high and low would be the second support point. And it still goes to R3, R4, and our technical tools allow you to go up till even R5 and S5. But I think for practical considerations, if you are taking two of them as shown here, that would be great. And retracement levels in fib are calculated using this approach at 61%. I hope you know that the central point there, pivot, is again high, low and close divided by 3, wherein the resistance points change, where one is at a 61.8% retracement level and the other one is 38.2, while the same goes on to the other side, down on the support side. Now, do you really have to do any of these calculations and computations? Absolutely not required, because all these are readily available on trading view charts. You probably, if you want to just see the numbers on how they work, you can probably see it on the money control website as well. Go to a particular stock, and if you can click on the technical details of stock, it will show you both traditional pivot points and even the fib pivot points. I wish I could show you that a little later. So this is the fundamental approach of how we deal with. Now, simply considering pivot points and just seeing what trade you should take will not take you anywhere. So it's always important that you understand, you set your own trading strategy, because that's an individual psychology as well. There is also a gut feel that plays out a role. So there are more than one determinant for you to take a trade. So simply because the stock is at a support level, you definitely have to enter the trade. What if it breaks the support and further goes down? So you also have to consider other factors like what I'm going to cover in my next videos or the upcoming videos would be about some relative strength index. One of the very key indicators that I also use is the RSI. The moving averages are very important, so we take into consideration multiple factors, what the stock's normal chart is looking like, what pivot points are talking about. Maybe sometimes we go by what the fib is talking about, in line with whether it's in the overbought or oversold zones from the RSI chart. And sometimes we would like to use a very interesting thing that I came across recently, is that like how a particular stock is performing when compared to an index. Like say for example, if the Nifty is growing at a very fast pace, is the stock also growing at the same pace? There are several stocks that outperform Nifty, and there are several stocks that underperform. Like for example, Bharti Airtel was one such stock that even in such a great fall, when the entire Nifty was hovering around, that stock didn't fall more than 10 to 12%. I mean, I might get a little stuck up with that number there, but anywhere between 10 to 12%. The index has fallen so much, the stock has remained strong because the strength in that stock is too good. I'm just giving one example that came to my mind. There are a lot of stocks that even when the market was crashing, they didn't crash so much. But also there are so many sensitive stocks that market has reacted only 3 or 4%, and the stocks might have ended up reacting 20-25%, owing to several other things also. Maybe that was the timing of the results and that didn't work in the favor of the sentiments of the market. There are a lot of reasons why a stock will fall suddenly like that, or why it will suddenly rise up. So there is no absolute prediction coming up from anybody, but using these pivot points we can definitely get a direction. And I've also been highlighting the importance of algo trades in almost all my videos. There are people who are not trading using their mind or something like that. They're just leaving it to the programmed algorithm. And when the algo understands that a particular stock price has reached, or the index has reached a particular level, say next Nifty reaches to 16,500, automatically trades are set in there where people start shorting at that level. So there is suddenly high amount of selling coming in. Now, are people really willing to do that? No, it's the algo that's performing out. So I would definitely make a full video on how these algos are working, and how you are seeing now a market which is more driven by algos rather than people's gut feel, or the state of economy or any understanding like that. Because earlier market was too sensitive to everything that was happening around. Even now they are, but now it's more like they trade between levels all the time. So people are very certain that a particular stock reaches a resistance level, and is it really hard to break the resistance? And then maybe sometimes what happens, once it reaches the resistance level, it might not immediately break the resistance and go further. So it consolidates there for a little while and then takes a breakout. Or sometimes once it reaches the resistance level, suddenly and immediately there is a lot of selling coming up, and it falls down. So these things can't be predicted with certainty, and this is what we have been seeing for quite some time now in the market. So yeah, you have to also consider the price action that is going on. You also have to consider the trends that is going on in the market, along with the volumes that are being bought and sold in a particular stock, and how they are hovering and wavering. All these are also the points that we have to consider while using a pivot points. Let me now present to you how we use pivot points, taking some examples. So yeah, here we have a Nifty 50 chart, and this is the Nifty's chart on a daily time frame. You can do this on trading view. The very easy thing to do is to apply pivot points. All you need to do is go to this particular tab right here, which is called as indicators, and here you would just type in pivot, so you get the pivot point standard. And once you go click on pivot point standard, you will be able to see the pivot levels. Now, as you can see here, these are the pivot levels for the Nifty. So right now, wherever you see P here, that is the pivot level exactly. And right now the markets closed just above the second support level. Yeah, very bad times. As you can see, there is a lot of dip in the recent times. There's only one green candle that is showing some kind of a positivity or a pullback, as you can call it. Let me explain this. You can see here at this particular level, This is the support level 2. Now normally what people think is when the time is so bad, as you can see there, you expect it to go further down, pick up some support here and then go up. But then here, if you observe it very closely and carefully, all these 3 days almost hovered at the same level, and that level is around the 15,750 levels. And from there was one good day to pull back, and then this one, initially the day started very well. If you can see, this particular candle that I'm talking about went very well, and it probably didn't close at that level, so it closed in red. So that was like a day that went up. If you can see the I'm taking the list levels on that, you can see the market almost reached up till 16,400, and there's a strong resistance at this level at 16,400, and then it had closed somewhere around, the close on that particular day is around 16,240. And right now you're hoping that it could go back on again. We don't know, there are so many scenarios that we take into consideration. I'm not going to speak about one specific day, because this is an educational video and this is not a market review video or how is it going to be tomorrow. So at this level, we inch up to go to this support level, the immediate support level here, so which is around at 16,500 levels. And if market reaches 16,500 levels, there are two possibilities. Will it take a support again and inch further like this, where you look out for some upward movement, and then it might reach the pivot levels, and from there it might again go further up. But when it reaches this level, this is called the resistance level, where again there could be, you can see always, like if you go back and see in the past also, this has been a strong resistance almost at this level, and then this is one more resistance level where the market couldn't reach, and almost at this level, if you see, there has been a lot of support. So if you go back and see what are the pivots in the past, that will also tell you. So this is a fundamental point in this kind of an analysis, that you see where there is a possibility of a retracement. Now if I clearly go by taking out how all these will help us, you can now decide. See, now there is a vacuum here. You don't know whether market will again come down to the second support level, or you will not really sure whether it will go to the first support level, break the support level and go upward. So here you got to keep your trades between these two levels, between the S1 and S2 levels, and then you have to take calls accordingly. Let me do one more thing. I will show you this kind of a thing for a stock, and let's see how we can phase out levels. The concept continues to remain the same, so we will see for a stock now. Okay, so there you see the Reliance chart. I've taken Reliance. This is a hugely traded stock, so I'm taking this and I'm going to apply the same logic here. And I'm going to now show you on this day. As you can see, Reliance is doing pretty well. As a matter of fact, it's a huge green candle that you can see. In the previous day when the market moved up so much, as I showed you a parallel nifty chart, but today it's closed almost like it did start go up along, it came down, and then it's a very very volatile day, and it ended up flat almost as where it started. So the previous day's high is around 25.30, and the current day's close is exactly around 25.38. So it almost did a lot of activity today. It went up a high up till 25.70, a low of 25.08. So it hovered for around 60 rupees up and down, but ended almost up in the same place with just a marginal increase of like what 0.4% or sorts. Now I'm applying the same logic of pivots onto this chart of Reliance, and you can see this time I've taken like 5. Now we can do some setting changes here to just get only 3. This is all up. I'm just showing you that you can play around with these tools and get so many things. So I'm going just taking only the 3 levels. Right now again you can see that owing to last few days of bad market conditions, it's broken the pivot, it's even broken the first support, and you can clearly observe here, after it has broken the first support, you can see how drastically there was a fall. You can see this piece here, and at this support level, that is at the second support level, it's picked up and come exactly retrace from there. So it's a classic example of how it was going good, it was about to reach resistance, but it didn't go up till this level. In the same day, it broke the pivot. Next trading session was bad as well, so it reached its support one. Then on the next day, it opened a slightly lower to support levels, and from there there's a drastic fall because markets didn't perform well for that whole week. And then where there were minor pullbacks, and then this one thick large green candle that I say, which helped. Again, there's a lot of buying, and then now we are again inching close. Will two more good trading sessions will take it to the support level, and then the market, based on the direction, based on several other factors, will it break the support level and go this way, or if there is stiff resistance, it can again fall down. So what should you do? So if you are trading on Reliance, how will you end up doing that? If you can see, going back in time a little bit, this had been a peak resistance at this point. Again, this one and almost this one has acted as a resistance every time, and you can see that this level tend to be the most support level. So now, as you use the formula, right, so if this was the most support level for long time, so the support levels for now are somewhere around that level only, and this acted as a key resistance in the past. Now, since there was a lot of good activity here, the resistance level slightly moved up from the normal average, and that is exactly why you see it didn't even reach till the resistance one. And in the upcoming days, if the market is performing well and if a lot of buying interest is coming back again, and then you possibly would see the support level breach and go up. Now, pivot points basically will help you understand this kind of a movement, and a large amount of your trading psychology can simply be based on these pivot points. Now, just by understanding whether a stock is at resistance or support, it will not just help you finish the story. So what you can do there is also parallelly look at the other technical factors, like in what volumes are the stocks being traded. And also you can take the help of another very important indicator called the RSI, which is called the relative strength index, which which helps you understand at what level the buying is going on. Is it in an overbought zone, or is it in an oversold zone? I will come up with an exclusive video on that as well, and we will talk about all of this. So uh, I just want all of you to get on to the TradingView platform, take your own stocks, try and analyze what are the pivot points, see how support and resistance levels mark, and how they will help you in determining what call should you go by. For a broader markets, these levels are very important, because once you know the broader market support and resistance level, you can as well see and perform on individual stock specific ideas as well. So again, a friendly word of caution at the end. All this will take a little bit of time to understand, apply, and then see how it works. So with patience, if you try and apply it on your own, no matter how hard somebody tries to explain you all this, even with a great amount of clarity from a video, you will still be able to get a full control only when you see it and apply it for yourself. So consider this as a learning process. Try apply all these, and in the comments do let me know what more videos you would want to watch on what aspects. And there is a lot lined up for your education purposes. And also I'm going to start telling certain experiences of mine, and also I'm going to share a lot of things on how IPOs are not faring very well, and I'm going to come up with a video very soon on those aspects as well, and not just continue to stick only to educational content. But yes, there is a lot more coming up. For those who have not seen my previous videos, please go do see the videos, and if you like what we do here, do share it to the others. Thank you. I'll see you in my next video. Bye guys.